many advanced data point like max pain, IV percentile, standard deviations behavior. So standard deviations behavior 1SD, 2SD behaviors. All these data points which is required for one successful option strategy trading, that is being given by these platforms freely. So these data points, if you are trading in the Nifty or anything, you may not get these data points. So these data points makes your journey very comfortable while forming the option strategy. First part. Second part, I have told you, since this is a continuous market, 365 days into 24 hours market, no holidays, nothing is there. So it has weekly options, it has daily expiry options, it has monthly options. So monthly options. So these are the monthly expiry options. So when you have daily, then weekly, then monthly, so what happens here? Your hedging become very comfortable. Comfortably you can hedge. Sometimes you will miss the chance in the daily options. You will have the chance in weekly options. Sometimes weekly, if you are missing out, monthly also you'll have. So that migration, that comfort of or easiness of doing the trade makes these things more promising. And as I said to you, the program what we have started in the February and second batch we have added in the month of March. What they have achieved till date? If I ask, yesterday also I have taken a feedback. Time to time I take the feedback from them. 2 months, they have not learned many strategies, 3 to 4 strategies, 5 strategies they have learned, but they are more confident. That is what required. They knew how to handle that 4 strategies. They knew what is their objective, how to make money in that. So that is what is highly essential. And again also I told you, if you are trading in the Nifty in current scenario, Nifty or stock options or anything, you are just wasting your time. Why I am telling it is wasting your time? Regulation is good, but whenever it is a over regulation, what you will do? So regulation is good, but when it is over regulated, what you can do? Over regulated in the sense, if I say there is a 17 lakhs contract of Nifty, I fix up one margin, then I said that I will change this margin as per my need. First initial margin I will take, then I will take a peak margin, then I will take another peak margin, day end peak margin debit. If I make the things more complex in the name of regulation, that doesn't go with the true spirit of trading. Any business. So anything, suppose you are running a business, somebody told you to supply some goods, you paid some advance. After 15 days, he is telling that no, this advance is not enough, you pay me some more. Every 2 days, if he is asking you more money, what you will do? Do you believe on that business? Similar thing is nowadays happening in our capital market. One wonderful market which was gaining the tractions. That market, in the name of regulation, they have virtually spoiled it. That is what is there. So we talk about the SEBI board, we talk about many things. How many members are there? There are only a group of 3 to 4 people. Board means it is enormous power. 3 to 4 people, they decide everything. Calendar spread is a problem for them. All these things, they come with new things. So these are the ways we have pushed our market. One wonderful market, we pushed it to the corner. Whatever the risk you are taking in the Nifty trades, with 1/10 of that risk, 1/10 of that risk, if you get 3x returns, means they are with 100 rupees risk. If you get x return, if you get 1/10, means here 10 risk. If you get 3x return, which is better? This is better. So it is not for promotion's sake. It has evidence with it. It has a evidence with it. So you must ask me, from where this 3x return will come? Will it grow in the trees? No. Nifty volatility. So volatility contributes to theta. Volatility contributes to theta. So Nifty volatility varies 15%, 10%, 15%. So this also you can say VIX also data you can see, India VIX in front of your eyes you can see. What is the VIX? 15%. But what is the volatility of Bitcoins and all? Or the average IV? 46%. 3 times more than that. That means if those options are having 1 rupee time value, Nifty time things, then this will have 3 rupees time value. So if you are earning there 1 rupee through some process, same process you can earn it 3 rupees here. Process will be different. Continuous data. So that is also another part. So this has a mathematical backings behind it. I'm not telling it illogical things. So here Ethereum you can say 70-80% VIX means volatility IV. So this 80% IV means it is 6 times bigger than the IV of your Nifty options. So the strategy if you implement there, similar strategy you implement here, so your profit will be 6 times bigger. But it comes with a inherited risk also. So risk also 6 times bigger. So here return 6 times bigger means risk will definitely 6 times bigger. So now that risk, how we'll handle, how we'll control, how we'll pacify, that is our job. So to pacify that risk, first thing what we have to do, we will not take any leverage. So mostly F&O products are leveraging product. 17 lakhs worth of Nifty contract, you are paying 2 lakhs and buying one Nifty. But your risk is 17 lakhs. But here what I am telling, if you have 2 lakhs, buy contract worth only 2 lakhs. Don't go beyond 2 lakhs because you have a volatility leverage 6 times over the volatility you have. There is no necessity to take that risk. In 2 lakhs itself, if you are initiating the position, that is equivalent to 12 lakhs return in the Nifty because its IV or the volatility is 6 times higher than the normal volatility of Nifty. So if you take zero leverage also, in 2 lakhs worth of position if you initiate, the impact we will receive 12 lakhs. 12 lakhs of Nifty trading. So this is what I'm telling. So if you are not taking leverage, then what will happen? This asset is not going to become zero because you are already hedged. So asset will not become zero. So you will not be losing the money. So these are the factors behind this, and that is why it is different. But it comes with a big warning also. Don't think whatever the strategies I am doing in Nifty, if I do it here, it will work, then it will ruin you with no time. Whatever the saddle strangle God conduct, that is whatever you are initiating, same saddle strangle God conduct if you initiate here, you will get big zero because it is a continuous data. So there also, what data it is? Stock market data nowadays. Many old participants can, anyone will tell. If you open up that formula and ask, they have written it is discrete data. Discrete data. Those indicators written discrete data. DISCRET. You search what is discrete data. It is a data which will have a continuity but in a fixed range, that is called discrete data. When those indicators are being formulated, But now it is discrete high frequency random data. Yes, now electronic trading has come, many things has come. People are not depend only on the newspaper. So it is stock market is discrete random high frequency data. Stock market data, again I repeat, stock market data discrete random, it will generate randomly high frequency data, high frequency data. But here when it comes to crypto, this discrete and random is moved out. This is high frequency data only, HFD. Why it is high frequency data? Continuous, no lag, 365 days into 365 days into 24 hours, no holiday leave, all these things. That is why they are high frequency data, HFDs. When the data become high frequency, that time many of your lagging indicators, like all your technical indicators, 90% they will give you false signal. When this is become a high frequency data, 90% of your technical tools will give you false signal. Why? Because they're not made for that. They are not made for that data. So what are the things I can use? You can use Monte Carlo simulation. You can use any volatility related concept. You can use any kind of method which is compatible with those data points, high frequency data points. Then only it will work. So there are couple of indicators also has come which is currently in line with that things. So you can say super trend indicator. This is in line with that continuous data points. It works very good in the continuous data point. Whenever you have a moving average cross, so crossover happens, that also it respects, because that also somewhat in line with that. But many of these other indicators what you are seeing, so they may not work. Average true indicator, ATR will work. So many new things you can get it here. Those indicators came afterwards, they will work it properly. Double EMA also another things you can work out, it will work. So many other things it has come. It is Fisher's transform, this also will work. So there are many new indicators has come which can work. But how many indicators you will study? Their number is, how many indicators are there? Many of you are studying. Can anyone will tell me? Till date, how many indicators are there? Indicators are 3875 indicators in the restelling. Many allied indicators also after that it is got added in the crypto domain, and that number goes to now 18,000 plus. In crypto domain, if you see, how many you will use? How you will know which is working good, which is bad? So there is continuous data points, number of indicators unlimited. Similar way, strategy, option strategy. Often people used to tell, why you are not naming a strategy? Why you are not telling that this is Falana strategy? Give a name. So saddle, strangle, got, corner, butterfly, like this way you have 32 strategies. Using these 32 strategies, how many combination you can form? 32 factorial means 32 multiplied with 31 multiplied with 30 till 1 dot till 1. Multiply this number. These many strategy combinations you can form using the 32 basic strategies or naming strategies. So how many fellows name I will give there? That is why, if that is the things, 3.3 billions, 3.3 billions name you will give, remember, and do the trade and make money. Do you think it practically sounds good? Forget about academical. Practically, if somebody does also with his extra brain power, practically it is possible to remember 3.3 billion strategy names, then while working, find out the best one out of that and use it and make money. Not possible. So we have to fix our objective. What I wish to do, I will do that. My aim is what? Every day I want some money. Okay, I don't want to do intraday. I want some money like intraday, some money I should earn. Provisions are there. I'm a busy man. I cannot do every day. Every week can I earn some money? Provisions are there. I don't want to do anything monthly. 1 month, one check comes. That is good for me. Can I get that? That was also possible. So many different ways we have to work on our aim or goal and earn money. That is what we can do the maximum. So many of you have opened the account yesterday. Thank you for that. And many are going to open that. So what I suggest, once you open the account, interact with me, initiate some small strategies just to tune yourself, just to learn, just to accustom yourself that environment for a 1 month period. Initiate some strategy, not with your own effort, since you have opened the account through my referral, it is my responsibility. So interact. If you will not interact, I will not call. So you open the account. So I am grateful. So what time you want to trade, that I will not do at all. That you don't expect from me. You are going to earn money. So you have to tell that yes, I opened the account is active. I am putting some fund into that. Can you help me to initiate some strategies? I will help it. So initiate some strategy to understand the system and do it. And believe me, once you start trading in this environment, especially crypto F&O, within months you will forget the Nifty, which your returns will be phenomenally great returns you will get, which you have never expected at all. That kind of return will come. But that kind of return is there means some effort should be there. Without effort, how it will come? Effort should be there also. Effort also, data points available free of cost by the exchange. They are directly exchange, these people, no middleman in between. They are not broker. These platforms are not broker. These platforms are exchange, means like your NSE, BSE. So this is how you can start your journey. So today our scheduled topic is of some spread trade. What is a spread? Like bread spread, you would have seen. You have taken a bread piece, put some spread on that, butters, nutters, whatever the things, jam bam, whatever you polish on top of that, that is spread. So why you put the spread on bread? Because only bread doesn't taste that good. So if I put some butter, chutter, all these things on that, it will have a good things in that. So it is going for the butter and bread spread. So we have many desi spreads. Paratha itself is a spread. Aloo paratha, methi paratha, all those parathas are great spreads. So it has a lot of stuffings, all these things. So that is what spread. Understand in this order. What you eat in spread, what you trade in option spread, that is also same. Taste, there you trade for taste. So only if you take a bread piece or if you take only roti type of stuff, it doesn't have that taste. If you mix it with certain things, so you enjoy the food. But in trades, whenever we do a spread, we never enjoy it. So trade, what is the major part in the trade? Risk. Risk is the bitter part of all trades. So whenever you initiate any trade, Especially in options, the risk comes fast. How much I am going to lose here? Risk. So what happens? You offset that risk, you reduce that risk. If you cannot make it zero, if you make it zero risk strategies are there. But for that, you have to continuously put the effort. Every day adjustment will be there. So here, risk is there. We are reducing the risk. That is known as your spread trade. Risk is there. We are reducing. Only chapati is there, having no taste. We are putting some spread, eating. So it is very tasty. We are enjoying the food. Without the spread, chapati will like a chapati. It cannot be called as a parota. Okay. So same way you now understand what is a spread. Trade has a risk. To offset that risk, we need to do something that is called our spread trade. For example, if I say that 85,000 call option of BTC you are buying at $3,000, so your risk is $3,000. So if you decide to sell a 90,000 call option at 1,500, then the risk is offset or risk is having reduced by 50%. It becomes 1,500. So this is a 50% of risk reduction. You can reduce 60%, 70%, 80%, 90%, 95%. Also you can reduce 100%. If you reduce, risk is zero, reward also will become zero. Especially this kind of comparison. But it is possible to reduce the risk to zero and still make some money. That is some complex initiatives you have to take. So you understood this is spread. This is how spread is reducing my risk. So when option trader initiate the option spread, कब बनाना है, कब करना है, when I have to do it, that is very important. When we have to do it. Spread can be initiated in all situations. However, the best way to do the spread is after a trend confirmation. Once I get a confirmation of trend, that time only I will participate in the trend. Trend is my friend. So, but with lesser exposure. So, example I have given, you have started using Fibonacci study, identified Bitcoins of trend confirmation 85,200. So it can continue till 93,000, maybe for 7 days period, 8 days period, 10 days period. Stop loss 83. So this is very clear. 85,000 of trend. It will continue till 93. Stop loss is 83. If we, after giving a uptrend breakout, if it somehow fall below 83,000, then that trend breakout is false. Okay. So in this case, what you have to do? You will wait till the breakout of 85,200. Once it happens, you will buy a call option, sell a call option to make it as a spread to reduce your risk, and you will book the losses. Once it comes to 83,000, you will book the profit. Once it touches 93,000, job is simple. This is how spread trade happens. You analyze a trend, find out a trend confirmation point, then you plan your trade. After that only many things comes. Risk reward, this falana reward, falana risk, how many days risk, how many days reward, all things comes afterwards. What is a spread? When to initiate a spread. In very basic terms, why I am telling? Because you should understand the concept. To understand the concept gives to confidence. Your confidence level will increase. Confidence level increases, your participation in that subject will increase. So here subject is a trade. Once participation in that subject increases, you will be objective. Now all of you are subjective. Those who are many used to tell me, I read this book, I read that book, falana book, hundreds of books, thousands of books, hundreds of programs, thousands of programs. They're subjective learnings. They're subjective. They're not objective. Objective means I have 1 lakh rupees. Is there a way can I get 5,000 rupees for a month? That is objective. So for that objective, To achieve, I have to understand the fundamentals. So once I have fundamental, my confidence will get built up. Once, because I can understand this subject, that is what the confidence will take. Yes, this is what spread. Once your confidence will increase, your participation, engagement with the subject will increase. Means you will find out, pinpoint how to make, when to quit, how to quit, how to enter. 4 to 5 plans you will be putting. Your entire path will be crystal clear. Then if you enter the trade, you keep it in this process. If you enter the trade, keep it in writing. You will never lose the trade. It is very hard to lose the trade. Hard to lose. As now what you are telling, it is hard to make money in the trade. I will use the word, once you go in this path, it will be hard to lose money. Evidence I have given. Those who are participants, those who are joined these programs, they have experienced it. Couple of people also asked me yesterday. Inder also asked me yesterday, why for a lot of ratio spreads and other things we have taken in this particular strategy. Why? Because we are making it hard to lose. Will not lose. Hard to lose. Will not allow you to lose the money. So this is how the setups will be there. Once you engaged with the subject, confidence increase on that, you will be, your plans will make the strategy hard to lose. Hard to lose. So okay, losses come through some other experiments, like you have taken extra leverages, this, that is different. But on trade, it will be very rarest occasions you will get where you are losing. So now it is hard to make money, that will become hard to lose. Process is very simple. Understand the fundamental. What I said, spread, like you are using paratha is a spread, bread is a spread, putting butter on that, it is a spread. Same way, that is, all spreads are utilized in food items to increase its taste, to increase its appeal, to increase its adaptability, to make you happy, your children's happy. So that is the objective of that spread. Here the spread is reducing the risk. Spread objective is reducing the risk. So example everything I have given. So understood, or anyone has any query? Anyone has any query? Ask me. Does anyone has any query? Please ask me. Now moving to this second part. So we have in this somewhat arbitrage tool is there, option arbitrage. So you can see BTC, load the data, done. Then option arbitrage, so calculate I have to go for option arbitrage something. So it is an update, I have not done it. It was popping up some update, maybe they have done it something. So for your program I have not updated it. Let me try this. So option arbitrage will give you a great help in forming the spreads. Great help in forming the spreads. So this is what first part is there. So here options, disclaimer comes to the option. I'm using BTC. I am going for, this is 16th is gone. So I am going for say 25th of April and loading the data loaded. So calls appearing, puts appearing. So do some calculations, let me do. So this particular put option I have chosen, why such a out of money. I can go for 90,000 put option, slightly in the money. So this is a tool because it requires a lot of computations. Yesterday I have shown you the strategy interface here. So this is going to be an automated interface. It will tell you what strategy you are going to take. Pretty simple and very authentic way it will tell you. So since I am just conducting the event, it is connected with some voice and all. So internet, obviously it will, so bandwidth will be slow, but those who are having the softwares, they can do it properly. Fine. So we'll see that. Before that, I'll just take you how many types of spreads are there. 3 types of spreads are there: vertical, horizontal, diagonal. So you understood spread. Now remember vertical, horizontal, diagonal. This is vertical, this is horizontal, this is diagonal. So have a thought on that. 3 things you remember. So what is vertical spread? Same expiry date but different strike. So you buy something, some other strike you are selling, that is called vertical spreads. Same expiry, but this buy and sell will have same expiry. Horizontal spread, same strike price but different expiry. One will be buy, other will be sell. So this kind of spreads, calendar type of spreads are horizontal spreads. Diagonal, different strikes, different expiry date, diagonal spreads. So there are 3 type of spreads: vertical, horizontal, diagonal. Same expiry, you are involving the, because one buy is there, other will be sell, one sell is there, other will be buy. So that is counter trades will be always there in the spread. So vertical spread, same expiry, different strike. Horizontal, same strike, different expiry. Diagonal, different strike, different expiry. Diagonal spread, these are the 3 different type of spreads. So once I am saying that it is vertical and horizontal, straight line, it cannot bend. Vertical, horizontal, straight line. Those who are advanced learners, they can take a tip out of this. So, but when it is, I am talking about a diagonal spread, this can be tilted, this can be tilted to 30°, 60°, and till it has a zone from 0 to 90°. It can tilt. Vertical, horizontal spreads, tilting is not possible. Only diagonal spreads can tilt to different angles. So these angles are nothing but your standard deviation angles. 0 to 90° you have. If you make it 90, returns will be small. If you make it 70, the returns will be small, means little big. If you make it 0, returns will be unlimited, risk will be unlimited. So diagonal spreads also align with your standard deviation. So you must say that from where this standard deviation come. Yesterday I have shown you. So many things whenever we go for this visualization of data, there one very good graph is going on here. It is top part 1 SD, down part minus 1 SD, minus 2 SD. So this is what it is moving, top part 1 SD. Slightly once it crosses 1 SD, you will get the 2 SD also. 2 SD also will come. Monthly, you can see here 2 SD coming. There is a median line, 0 line. So you have 1 SD, 2 SD plus 1 SD, 2 SD minus. So this is what it is telling. So how it has been revised also it is telling. Difference of implied and realized volatility graph plots the difference between implied and realized volatility of the underlying asset over a specific period. What it says? Implied volatility and realized volatility. When it says implied volatility, all call options and put options, implied volatility. All call options and put options average IV. And monthly, every time one data point is coming, Bitcoin price is changing. So by taking those data points in logarithmic method or in Gart's method to find out yearly volatility of Bitcoin, that difference you take IV, difference between implied minus realized. If it is negative, Negative side it will come. Positive side will come. 0, it will come 0. So what way it 1SD, 2SD differs? So here it is coming telling negative. Means your IV, average IV is less than the real volatility of Bitcoin. Volatility of Bitcoin. Then only it will negative, it will come. Average IV is lesser as compared to Bitcoin's volatility. Okay, so that then only it will come to the negative. So now it is coming negative. So negative. So what you should infer from here? So this is coming now negative 5.77. Means volatility of underlying asset is more, IV of the options are less, and that is also 5.77% less from this. What does it mean? That means options are the barometer of the market. Though underlying volatility is now there, options are telling that their confidence level is more. So they are saying that though underlying volatility currently more, but it is going to fall. There is no need of hedging. There is no need of bargaining. There is no need of nervousness. There is no need of being panicked. These kind of things suggest. From where you will get this data in the NSE and all? Whether they will give? They will never ever give. Even though that data will be there, they will try to sell it off. So our country, all protectors are the Bhasmasurs. Means all that whatever you say, that all our protectors, they are not real protectors. So these are the data points you require. If they will give you that data, you will make enormous success there also. You will understand every behavior. So first, their data is not there. Even though that compute and take that data, so that also you can't use, because there big genius people are sitting there. Someone will tell calendar spread causing problem. Someone tomorrow will say only saddles are long strangles are causing problem. Day after tomorrow some regulation will come. No, all these things are wrong. Butterflies are causing problem. We will not allow that butterfly to happen. So all these things are there. Cause of problem is different. So earlier days, in few months back, before this regulation, what I was telling? I was telling you our market is going through a big manipulation. So that manipulation happened because we brought a instrument which is known as exotic options. Exotic options. These exotic options we treated as a plain vanilla option. All these options, whatever you are seeing here, all are exotic in binomial terms. Their IVs are given here. They are exotic. Life is small for these options. So here, exotic options. Exotic options never follow your Black-Scholes formula for delta, theta, vega calculations. We used it there. What will happen? So when you used it, certain people, those who are using the algorithmic system or algo trading platform, they are very intelligent. They found out that yes, one instrument which is exotic, but these fellows are computing it through a wrong process, and they are considering it is a plain vanilla option. So use these things to hunt them down. So crores of rupees they made. Crores, you can't compute. Multiple crores is being made by those algo platforms because of weekly options. Because of weekly options. And that problem was being very much taken care of by these crypto platforms. What they do? So in Nifty weekly options, you are seeing IV is more than 100%. How many of you have seen that many times on the day of expiry, you'll be having IV as 150%, 150? How many of you have seen this? Can Anyone will tell me? 150 IV of options on the day of expiry or one day before the expiry. Weekly options, you will get 150, 100. What does it means? IV is 150 means? Never. We want to buy and sell. Why should we bother that whether it is 150, 250, 350? It is their things. So I want to eat rasgulla. Let my sugar level be 500, 600,000. What do I eat? It is not coming in front of me. That is like na. IV is 150%. I just don't bother. I want to buy the option, sell the option. That is what I want to know. Only buying and selling. Let its IV 100, 150, 200, 250. It is like I am already having sugar 200. So eating every day rasgulla, jalebi and other things. So let that sugar level go anywhere it want. I least bother. That is same thing. IV 150% means you are telling delta should go above 1 for call and it should fall below -1 for put options. Very fundamental itself you are contesting. You allowed this. Once you allowed this, algo fellows, if there is an opportunity you give in plate to the fellows, what they will do? They will utilize na. So many times what I have shown you. What I have shown you. Many programs I have shown this. What I have shown you, many of you have forgotten or many of you would have remembered. Many of you have forgotten or many of you have remembered also. What I told, September 2021. Till this point it is okay. 2021 September or 2022 September. September 2022 till this point it is okay. Our net F&O turnover by the FIs, this is for FIs, F&O turnover of FIs was 58,000 crores, 70 crores like that till September 2022. October onwards it has started jumping up slightly in between some pause. Then September 2023 onwards, havoc. See the values, 2,38,000 crore till you can say September 2023. Before that, to get 1 lakh crore itself is very rare to get. But what happened? What is the magic happened in our economy? Suddenly from September 2023, this gone to 2.38, 3 lakhs, 6 lakh crore. These are all selling of options. Then 2 lakhs crore they have taken here. Again 2 lakhs. Then regulation came into effect. But in between also 2 lakhs it has gone. So suddenly now fallen down. 3 lakhs, 4 lakhs crore, it has fallen down to 80,000, 60,000, 20,000. This month it is 24. So FI's figures are 23, 24,000 crore. DIs if you go, it will be so much. F&O figures. F&O figures 36,000 crore. Why that magic? Where September 2023 onwards, what happened? Can't you, means as a trader, can you ask yourself this question and tell me? I was conducting that time program. Many of you are part of that program. Many times, not one time, two times, every program throughout the starting to ending day, I was telling it is a manipulation going on. You have given them the opportunity to earn money in plate. You arranged, you told that you loot us. You have not followed the due diligence of mathematics. You have done a wrong calculations and you have just celebrated on your STT collections and other things. You have never given any weightage to know where my calculations is gone wrong, and they looted us. Once that loot is being completed, then time you wake up, still you do not rectify your mistake. You said that no, hedge out some weekly options, keep some things there. Calendar spread is the problem. Take out calendar out. That is not the contest. If you cannot manage weekly option, how these fellows are managing daily expiry options. They're very clear. Here, if this option is having 80-90% of or 100% of its volatile IV, the delta will become 1. Delta will become 1. They restrict out of money options. Suppose if you go for the out of money option, far out of money options. So you can say 17th, I'll get many far out of money options. You can say, so which has very, very less probability to become in the money, but there also they will make delta as 0. The moment it crosses, IV crosses 100, for out of money, the delta will become 0. For in the money, delta will become 1. Once you make delta as 1 and 0, let the IV go to 100 and 150, 200, 300, anything you want. So you are conveying to the market, you are conveying to the user, it is 1 delta in the money. So no theta is left out. It is your risk if you are telling it you are an intraday trader. This option having full and full intrinsic value, but still worthless for hedging. Once you make the out of money options, IV is big, but its delta is 0. You are conveying to the option trader, this is a useless option, don't enter there, because it is worthless for hedging. So once you convey that idea, automatically manipulation stops. But what our people see, this part you have seen, what our people say, if IV is 150%, sorry, IV is 150%, that means every 1% change in the Nifty, my premium will go up by 150%. So they bought 1 rupee option. Somebody has sold them 1 rupee option and be happy and made money. And these fellows have lost money. Many thousands with that money, they put lot of influencers to put the videos in the YouTube. You will become crorepati, arabpati, pati after pati. Everything you will become by doing the option trade. And that also happened. Many people having any basic understanding on options, they jump to that. Due to that, all restrictions has come, and it has come to a stage that now if you are conducting a training program on Nifty options, what is the new regulation says? Nifty future and option, if you are conducting any training program, you must give the examples from past 3 months back data. Means today if I am conducting 16th April 2025, so I will go 16th March 2025, February, January. So my examples is from the 14th January 2025. I cannot give an example which is very close to that. So what happens? You are learning also, they put a tala. You cannot learn. Because that time IV will be different, situation will be different. So that example, if you use now, what is the use of that learning? So that also gone. See the regulation effect. They made a computation mistake. They treated a exotic options as plain vanilla option. When they failed, they did not take that responsibility to their head to say sorry that we did it. Because of this, people misunderstood it and they put their money, because people will throw the mud on that, what kind of regulator you are. To hide that, they made it. Calendar is this, that. Training also you have to give this kind of examples. So this is what our pathetic nature of this thing. Academics, we never speak. We never do research on that. These are all borrowed model. VIX, who was invented? VIX. From where we have come? About this VIX. VIX white paper, read it. Who invented VIX? Who invented the name of your saddle, strangle and all? Straddle, strangle, got, condor. Okay. Who invented? Chicago Board of Commodity Exchange, CBOE, Chicago Board of Commodity Exchange, have named this and this thing. So we will see once this program, we will be seeing once the Chicago Board of CBOE board members, CBOE board members and their so CBOE governance board of directors, CBOE Chicago Board of Commodity Exchange. Have a look, introspecting our own thing. I am not here to criticize anyone. So these are the people, board of director, executive committee, governance documents. These are the huge group of people. Take anyone here, senior vice, see their profiles. So where they have worked, what is his degree? Here you see what is his degree, where he worked, what contribution he has given, all these things you can see. So you can see here all their degrees and all their credentials are there. They worked, their research, their qualifications, everything, and management degree going for only with respect to board of directors, executive governance document. So all these committee compositions, everything you will get it here. Who is what you will get. This is got. Now we go for SEBI members. SEBI board members. We are biggest. What is what we are? We are biggest people in this. This is chairman ji. Now he has come. We have how many? 1, 2, 3, 4, 5. Biggest exchange in the world, derivative exchange. CBOE, how many? They are the board. They are the Karta, Bhagya Vidhata. So go for their qualification. Profile. See the great qualifications, where they studied and other things. Fine. Where this one man studied and his profile. So see all these things with your, not to criticize anyone. Compare with that, one largest derivative exchange in India, not India, worldwide. What is their board composition? How many members? What is their academic credentials? What is their contributions, work experiences, and contribution to that field? So that is what differs us. We can say we are a great nation, big nation. We made great things. We want STT, we want GST, everything. But think about things. Can't we get some 20 to 50 academicians, those who are in IITs, IIMs, to get into that board? At least to debate, discourse, contest on various aspects of regulations and various aspects of our governance instruments, their things. Can't you get this thing, such a big nation? So such a big nation we have. 150 crore civilization. We have enormous IITs, IIMs. We can't get 10, 20 talents from that field to make it happen. And we have made some people whole-time member. Till the death they will be the member. Whole-time member means no retirement. Full-time member, whole-time member. So whatever पांचों के दिमाग में जो घुसा वही नियम. So वही हो गया हमारा केस में. So these are the things is for that only. Now I discourage people to trade in Nifty domain. If you are trading, you are just wasting your time. No ethics is left out. Because if I got a valid argument why calendar spread should not be taken and it is a tool for manipulation, I will take back my words with perfect humiliation. Perfect humility, I will render a great sorry. I will fall in their feet and tell I am extremely sorry, you are very much correct. I have found no reasons why one particular strategy, that too is being demonized as a calendar spread as a cause of this thing. So in that, which spread it comes? That means all horizontal spreads, all diagonal spreads come under calendar category. These two category you are stopping. You are giving this only one category to trade. These two category you are stopping in Indian market. So why someone will trade? If you are intelligent enough. But if you are a gambler, I have no say. 90% are gambler. Buy the future 100 rupees, 1000 rupees, 2000 rupees, you gamble. I have no say for that. These two things you are demonizing. You are telling one day before expiry, I will jack up your margin by 300%. On the day of expiry, I will jack up your margin by 400%. If you take these two category of strategies. How many of you think it is a genius decision? Such a huge, beautiful market. Are different. Income tax you are paying on F&O. How you are paying? Net purchase minus net sale is your net gain, or sale minus purchase is your gain. Premium means all net premiums you received, net premium you have given, difference is your profit. So that profit you are paying the tax. How SEBI calculates? Strike plus premium into lot size. It is for what? They want STT, they want SEBI tax. For that, this is your turnover. If you have bought 100 rupees, 125,000 call option, your turnover is, considering it is 100 as a lot size, according to SEBI, your turnover is 25 lakhs 1000 rupees, 25 lakhs 1000 rupees, 0.1 lakh turnover. This is your turnover. But according to income tax department, if you bought at 100, sold at 125, then your gain is only 25 rupees. Your turnover is only 25 rupees is your turnover, not 2.5, 25 lakhs buying, 25 lakhs selling, 50 lakhs is not your turnover. Your turnover in option is only 25 rupees. So that contest, two department, two different view on turnovers. Two department, two different treatment on turnovers. So this is where we are lacking. Who suffers in this kind of cranky rules? Retail traders. You and me. We suffer. We are okay, SEBI tax you are taking less, stamp duty you are taking less, STT you are taking less. So with generosity we have accepted, okay, you count 50 lakhs, no problem. It is costing us 50 rupees, we can bear it. We did not contest it. We would have contested it if your income tax is calculating this thing. Why you are calculating this way? If your income tax is in this order, every trader's account, whether profit or loss, it will become a huge turnover, Baba. All will become like Ambani. If this way the trade turnovers will be calculated, then every trader will have 15,000 crore, 20,000 crore turnover, Baba. Auditing is required. So that we should have contested. Two department have by two different ways turnover is being calculated. You do a web search, it is not my words. You will get hundreds of things. How turnovers is being computed in income tax, how SEBI computes the turnover. So both the things you search in the web, you will find out. That is what we are lacking. Academics, we have great talents, we do not give them the space. We have great things, we never think it is a big domain where research can happen, Many fintech companies can come, many enterprising people can come. So it is not trade in iron, steel, that is important. Trade in your shares also is very important domain to your economy. It is indeed a huge domain to our economy, but they don't accept it. It is a part of economy. It is a prime wing of economy. Neither government accepts or this thing. So that is what the part of contest. And many part of the things also, if I say you will start laughing. We have many genius in that board whose education itself not known. Can you believe? What degree they have also not available in public domain. Body which controls near to 3 trillions of financial market activities. Can you believe this? This kind of things we are having. So coming to our spread, this is what our spreads: vertical, horizontal, diagonal. All 3 spreads we can initiate here. Coming to the money, how we'll make money here, that is very important. What is the process of making money? Simple example. I am just going to my own that software here. So here, once I go to the software, say I am taking the Gann study here. I am going for a positional. I am going for a 10 days period. I am loading the Bitcoin data. I have some anxiety to know what is the Bitcoin's trend days computation as per hexagon, whatever may be. Gann angle volatility. Natural constant I can go. It is a simple crisp. So it is telling me hypercycle for 10 days. It has still 88,000. And same way, if it is going in the downtrend, it can come down to 80,500. Fine. For coming 10 days period, I have 88,651 and 80,455. These two are the range. Maximum I will reach here, minimum I will reach here. Go back to here. Go back to the May month. So now 10 days are there, but still I am going for May month. What I got? 80,400. So 80,000 put. I am putting a strategy builder here. So this I am going to buy. It is telling if it is falling, it will have one lot here. Price is here, $3,000. One lot will be very fractional, $3. So this is 3,000 is belongs to 1,000 lots. 1,000 lots. So I am going for one lot. One lot means this divided by 1,000, $3.36. One lot is. So now I am going for same way here, 88,000 call. Buy. So this is the place you are telling it will come now. So I will be buying this one. Here it will come in 10 days or here it will come in 10 days time. This is I got. Fantastic. Now both the places in one lot, how much I have put it money? $3.36. I have put it here $4.5. So total my investment is 4.437 and here $7.86 is my investment. I want to reduce it, use at a spread. So I will be using diagonal spread as I told to you. So till 30th May I have the time, but I will start my journey from 25th April. So 25th April, I'll see this is same strikes, whatever 88 and telling. So 88 I'll sell. Same one lot. What price? 1088. Because till 30th May I have the time. And same here 80. I'll sell one lot. So how much risk I am reducing? You can just have a look here. One lot. So initially what I have told you, buying of these two things, one lot, I have invested 8 point, so divided by 1,000. So 3361 divided by 1,000. So it is 3.36, 4.5, 7.86, $7.86 I have invested. But what I am going to get? 25th April, I am going to get 0.78 plus 1. So $2 I am taking out through selling process. If it happens to go there, it is good, well and good. Doesn't go. So I have, how much I have reduced my risk? 5.86 now. Say, now my risk is, it has neither gone to 80 nor come to 88. It has neither gone to 88 nor come to the 80,000 Bitcoin. Okay, 25th arrived. 25th arrived. Then I will go to the 2nd May. I have weekly options again there. So there, once 25th comes, I will go to the 2nd May. 2nd May, same thing, 80,000. Same price I may be getting 700. Now it is 1,400. That time 700. So here again I will go to that same 88. Now 1,800, maybe 1,000 rupees, $1,000 that time. So one more week also. So this 25th I realize $2. Again 2nd May I will realize $2. Okay, 2nd May, after one more week will open, I will realize $2. $3. So 2 weeks of May I will be getting $2. Considering that price also same like this. April already I got. 3rd week of the May also I will get one. So if by this process $2 I take and price never move to 88 nor fallen to 80, what I am losing? I am going to get back all my money to $2. In between, if it is moving, great, because these are the options having very less time, very less life as compared to this monthly option. So definitely their theta will be 0. I am going to make good money in that calendar. So now the calendar, so how much theoretically I will make? If it doesn't work out, 3 to 4 weeks, I will get back my money. If this calendar work out, how much I will make? Now that also I can say. Now 84,200. So 30th May, 84,000 call is quoting at 6,000, and 25th April approximate same 84,000, 2,500 means the gap is 4,500 point. That is what? So 20, because nearest same behavior it will show. So 84,000 call option of 30th May is 6,100. Correct? 25th April, same 84,000 call option is 2,500. So 6,100 minus 2,500. So at the money or just in the money strike is having a spread difference, calendar spread difference of 6, 5 2s are 3,600 points. However, here my call options are having how much? 3,000, 3,400 and something, 3,400 something. So 2-3 weeks if I do not get also. 2-3 weeks if I do not get that money, $2 I am going on harvesting. Whenever it goes to 88,000 or 80,000, I am going to get back that money. Same $3,200 extra it will come. I'll keep harvesting every week basis. This is a simple critical example, very, very clear example how getting a loss is difficult here. You have a choice of weekly option, daily option. Suddenly you are seeing IV, which I am seeing at 48-50%, it has gone to 70%. Suddenly it happens in the future. Why should I sell the weekly options? I'll sell daily options. So same strike, daily options I'll sell. Same value it will be there. I am saying that why should I sell weekly options? I'll sell the daily options. So every day I'll start getting the premiums. So these are the processes you can make very good gains in crypto domain, crypto fund domain. This is a simple example I have given. Many such strategies it is being there. Similar spreads. What happens? This is a software If you go to strategy, hit here, it is started forming the spreads. It is forming the spreads. Yesterday you have seen some spreads it has made. So some spreads it is made. So it is telling that every day you can. So here my point is, if you are focusing only on intraday player with Nifty, that doesn't mean that you are not taking risk. One contract, one lot of Nifty, if you are trading at 17 lakhs risk you are taking. Whatever gain you are getting, X return you are getting. This crypto domain, without taking this thing with 2 to 3 lakhs, there you, whatever margin you are paying for this, without hedging, whatever margin you are paying, with the same margin, you will get 2x or 3x return. And many alternative to the intraday exist here. You need not have to do intraday. You have to initiate and forget. You wait, you will get the theta. Many tests we are running, many things is there. Evidence based. I'm not telling about with the. So here you can say how many things is running. So all are maturing. See $60, $23. Future gone to negative, it will come to positive. Here too also you are seeing this thing. So here also some future positive, something. So here $39. So these are the things, daily expiry options are there. Combination of strategies are there. Every day basis, it will give you the gains. Every day basis. Sometimes negative, sometimes positive, sometimes this thing, but net it will land you in the positive territory. Positive territory. So you can say that here $100 came, $34, $100, this $63. So here you can say 6 days it is showing, 4 days we win, 2 days we lost. So it is a 2 days we have lost, 4 days we have win. So by this process, very low volume, but it is giving something. So these are not losses. This is again comeback, because that you can say some in the money we have sold. So when that in the money will come back to the out of money, that time we will gain that money. It is not that losses, but these are. So when it is surrendering that gains, we are getting back that money. So incident wise, you can get very good returns in this incident wise. So it is, or situation wise, incident wise, all places you can able to, through spread trades, many alternatives to intraday, you can earn very good profit in this with lesser exposure. No utility of, see here you are seeing that some 1.5 lakhs or 1.6 lakhs money is there. How much I am using that? How much of that money I have utilized here? Only 12% of that. If you add all these things also, 12 plus 11 plus 6, that is not even going to 50%. Out of this money, my utility only 12 to 13%. I don't want to use more than that, because I don't want to take leverage at all. My future value is only 1.5 lakhs net exposure I have. With that, if I can able to earn on an average $50 to $100 a day, why it is not you? You can do that. So $100 is coming near to 8,500. It's not a bad money. Even though 50-60% of days, if you get that money, that itself is a great money. That is what spread trades will give you. Here all 3 spread trades are there. No regulation that one day before expiry you close, or else I will increase your margin by 400%. No regulation is there. On the day of expiry, if you do not close it, your position by force, I will increase your margin by 600%. No such restriction. Calendar you cannot take, this you cannot take, falana you cannot take. All strategy you can do it perfect, this thing. So turnover related issues are not there. They are perfectly managing this thing, and no difficulty they have. Only they have said, they have not told us openly. They said these are the options we have. By nature, they are exotic options. So we are controlling their exotic nature with specific things. Anywhere IV shoot up above 100, I will make the delta as 0 or 1. So it is up to you to understand whether you want to enter there or not. Once that is done, it is done. Okay. So this is what the things is there. Crypto domain is there. So tomorrow you have one more session, 1 or 2 strategies I will take. Simple strategies I will be introducing you to tomorrow. If you like, you initiate. If you like that, okay, I want to test it, one account you open, preferably my referral code. Lot of effort I am putting you to teach you these things. Definitely in return I will ask you something now. So use my referral code, open up the account, test for 1 month with one lot. How much money is required? Some 20, 30,000 you put with one lot. One lot. Test for 2 months, 3 months. It won't great return, it won't come. $2 you will get, $5 you will get, $1 you will get as a return. Test for 1 month, 2 months. Then after, if you are confident, money is coming. Money is coming. This man was telling correctly. Then increase it to 10 lot. So your $1 income will become $10. Increase it to 100 lot. It will become $100. Have a fixed idea. Okay, I am okay with $50 per day. Restrict there. Don't keep on multiplying. No, increase the size. I will get $5,000 per day. So if you are like Ambani, you can do it. It's not that, but increase that thing. So $25,000, $25, $50, $100, $200 if you are having big money, $500. So restrict yourself there. That itself is a bigger thing, and that is possible here without taking leverage. Nifty, you are taking leverage. So Nifty, you are taking 17 lakhs contract. Even though if you have taken 2 lakhs rupees margin, you have one day 2,000 point fallen. What you will do? One day say down freeze 20%, 3,500 point it has fallen. Down freeze. Your money will be there. Even though if you have option, broker will allow you. He will close your position because it is a leverage product. So for that, you can't say when it will happen, but it is there. That chance is there. But here, without leverage, I have 2 lakhs. I will take only 2 lakhs worth of position. What will happen? Even though it is falling 50%, going up by 50%, or falling by 50%, I have the hedgings, but my money will not be depleted, or my position will not be square. So since I am not taking leverage, what is in favor of me? Because the instrument where I am taking the leverage, it is having only 12% or 15% as average volatility. Here the instrument what I am not taking leverage is having 60% of volatility. So my return is the same. Without having a bigger exposure also, my return is same. That is important. That is important. Fine. Inder is telling, before I become 30, I should have minimum 3,000 crores. So this is referral code. You open up an account, you can add anything, you can deduct that code. It is not like that. See, on the page itself, we have given this referral code. See what? So people think here that referral code means this man is making some money. Definitely I will make some money. That is not the things you manage. You mind your own business, because once you are going to learn something and earn something from using my expertise, you must give back something. Nah? How it will happen? You will gain everything, and I am a fool that I will be taking programs, teaching you, making you the things to earn, and clap here. Very good, you did a great job. Not like that. It is a business entity. Though we have a social responsibilities and other things. So here I have given the referral code. So if you click here, all videos I have given. If you click here and open up here the code, so here my code will appear here. So if you open up your account using my code, then it will be linked to us. It has other benefits also. Once it is linked, we'll be actively monitoring it. We'll be helping you to initiate the strategy. These are not easy jobs. Don't think that anybody can come to the option strategy market and make money. It is not that easy. It is not that easy that if you give me some tips, give me some 2000, 3000 you take and give me the tips, you will make money. No. Options domain, until and unless you have not learned, you cannot earn 1 rupee. Teachings is different. We can train you, it is different. However, to earn the money from the option strategy, you have to do the learning homework of your own. That is very, very important. Very, very important. So for that, one good stage of things are there, because here maybe lot of regulations are there. We can't teach also, even though I want to teach you how to make money in the options. Now they have increased the margin. We found out a way how to bypass that margin or hack that margin system. That also we found out, but we cannot tell you that. So we cannot tell you that, because if I tell you that regulation violation through training winning, see here what happens, people think that it is a I learned from him, I invested. No, you learn. So you put a SEBI complaint, that poor man goes to SEBI to complaints. So like this way, many people are doing. SEBI thinks that anybody gives a training also he is a fraud. Anybody who is trades also is a fraud. Anybody so does anything in capital market is a fraud, according to them definition. They think everything as an investment. Somebody is going and learning option strategy from someone. How can that man giving one example of real market to explain one strategy has manipulated the system? So that means you are telling, if you are a professor in mathematics, you are teaching in the year of 2025, you are telling that you don't give any example from 2025. You must use the example which is being taken at 1975. That is what you are telling. See the geniusity of our people. Regulations. It is not only that, you are conveying to the market, education is an investment product. So anybody goes to engineering college, he should say that if I did not get a job, then the college has the fault. Somebody taken admission in engineering college. Whether he studied or not, writing exam, I am not telling about that. If he does not get a job, so as per the SEBI, he should sue the college. Now because of you, I did not get a job. You give me back my admission fee and everything. Also give me a penalty of another 5 lakhs. Baba, this is a system, this is a regulation we are talking about. It is not the things. We have to open up, we have to grow up, we have to, instead of suspecting, we have to introspect where we have wrong. So that has accounts. Keep in touch with me. Those who have already opened up the account, funded something, keep in touch with me, so that start implementing strategies. Accustom yourself with the environment. Test things. Develop your confidence first. Once your confidence is developed, grown, then money will come. So with this, I will be ending today's session. Tomorrow we will discuss some fantastic strategies based on our goal. So with this, I will be ending today's session. Thank you very much. Thank you for your time.